After starting out on the wrong foot and seeing trading turnover plummet by more than 60%, things are looking up for the Nairobi Securities Exchange. The bourse has shaken off the strike threat by brokers and is on a track to introduce new products and capitalize on new developments to deepen the capital markets. Here's Adelaide Changole with more on that story.
The start of the new year usually brings with it good tidings and optimism, but for the Nairobi Securities Exchange, 2015 had brought less joyfulness and merriment.
We've had a number of companies which have announced profit warnings, and the numbers haven't been so good, or profit declines.
The situation was worsened by the planned rollout of the capital gains tax, which was pegged at 5% of net earnings from investments in the real estate and the capital markets. But the requirement that brokers collect and remit the tax to the Kenya Revenue Authority ended in a standoff.
From the stockbroker's perspective, it was more of an administration issues. Like, it was a bit cumbersome for you to collect on on behalf of people.
This had trading at the bourse as investors opted to sit out of the melee and wait for the dust to settle down.
In January, equity turnover plummeted by about 66% that is on month compared to December.
But things are looking up for the NSE after a deal ended the standoff between the taxman and the brokers and clarified how the tax will be remitted.
Generally, there's a lot more optimism on the economy. There are a lot more investors coming into the market. New players are bringing in new investors, and so.
Despite starting on a sour note, analysts say the outlook for the rest of the year is positive given the government's focus on infrastructure development, the number of projects in the pipeline which will translate into greater investments, as well as the introduction of new products that will increase the attractiveness of the country as an investment destination.
Turnover is going to remain very healthy for most of 2015, bar for any uncertainty. And especially when we're looking at new products which are going to be introduced, especially the derivatives from June.
But analysts want the government to issue clear guidelines on how the new tax will be levied on foreign investors who account for more than 50% of the investment in the NSE.
They're trying to see how much are we going to make out, and is it really worth it to put it in for example, NSE instead of putting it in Dar es Salaam Stock Exchange.
Adelaide Changole, KTN Business.